in the last week, I've been following the rise and fall of an effort by activist investors to take over part of the Aragon Treasury. Aragon is a long-standing crypto project that focuses on building tools for DAOs, and it itself was moving toward becoming a DAO by moving control of its treasury to its community. Now, the community was really full of lots of activist investors who wanted changes at Aragon, and they started making noise about pursuing those changes, including with an investment fund behind them called ARCA. Well, Aragon didn't like that so much and decided basically to get rid of its governance and to move the DAO from a DAO that controls the organization into a grant-making DAO. So this is really a story about decentralization theater. And also, Will, as I think you noted on Twitter, it's another example of time being a flat circle.
It really is, Danny. So back in 2021, I'm looking at the piece right now, actually, I reported on a very similar subject with Aragon. It was Aragon Association, the Aragon DAO. Aragon 1, I believe, was one of the names of the entities. And they had a bunch of resignations. I believe about 12 staffers left those two entities due to a lack of financial transparency. A co-founder was also essentially forced out at the time. There was a lot of disruption. A lot of people thought that Aragon itself was going to shut down. It looked like they were probably just going to sell off the IP to their voting software and the governance platforms they've been building. For those who don't follow Aragon, it has been around for quite a while. I think most people who have been having a good fingerprint in the space for a while know about Aragon. Not necessarily a top project, but definitely a project that people are familiar with, has stuck around, and has been developing some important governance schemes for DAOs. But it's been hit twice now with problems that we see over and over again with DAOs, which is some people have power, some people don't. There's money involved. You can't trust everybody. And at the end of the day, someone has to write the checks and things start to fall apart. I'm not clear on the similarities between these two stories. I mean, they're 2 years apart, very different people involved, just similar entities. But I think it just goes to show that DAOs have some problems. Jen, over to you.
Yeah, I think this is just another example of the real world entity that is often attached to the DAO, making decisions based on the organization's business plan, right? These DAOs are very slowly, progressively decentralizing. They have business goals to meet. They have many of them have real businesses in the real world that sign real world contracts and operate just like the Aragon Association acted here. Danny, I have a question for you, though. Can you explain to us what this alleged 51% attack was that kicked off this whole thing?
Well, it's really there's a lot of room for debate here, because the 51% attack in crypto specified it focuses on this idea of taking over a network by taking over the node, taking over the validators, and being able to control, because once you control 51% of the validators, you can control the history of transactions. What's happening here is not a 51% attack in that sense. It's really just an example of investors accumulating a governance token in order to vote and get their position through. And as far as I can tell, the project that they're focused on not being very happy with that turn of events. So I would argue that it's not a 51% attack. It's just an example of a DAO not liking what happens when you're a DAO, which is that there are lots of different opinions, and sometimes people aren't going to agree with you. The steps they took here, which is basically to say, we're no longer going to be a DAO. We're just going to be a grants-making entity. That's quite a drastic step, especially for a company, and I'm going to call it a company at this point, that is focused on building software for DAOs.
All right, Danny, I'm gonna throw another question your way. So, based on your reporting, what's animating this bad blood? Obviously, there's some group that has one vision, another group being labeled as activist investors that have another vision. What's the real root of what's going on here with this story?
Yeah, so there are two factions, right? There's Aragon, the company/team, and then there's the group that I've called the RFV Raiders. This is a risk-free value. What they basically do is they look for tokens that are trading below book value, which is the value of the token relative to the money in the treasury, basically shares, and try to find ways to close that gap. Right now, Aragon, I think I'm confusing my decentralization theater actors. Right now, now, Aragon has maybe 200 million in the bank. The token's trading around $2.90. It should maybe be trading more like $6 if you think of it in terms of book value. So the RFV raiders have accumulated a lot of these tokens, and they want to hold a vote to conduct buybacks of the token in a way that would close that gap and make the token's price more representative of the value of the Treasury. And that is something that Aragon has done in the past. It's done buybacks before. Now, though, when the external group of investors are trying to be the impetus for moving this to completion, Aragon is less amenable to that position and has taken a really drastic measure here, I would say. I would
Interesting
also
stuff.
that,
Interesting stuff.
Attempted to speak to them repeatedly, but they haven't gone back to me.
Well, we're going to set you free and get you back into those like halls, like DAO City Hall. I just imagine you lurking around every corner, watching this play out in real time in only a crypto way.